Today, I'm meeting with Dr. Dietmar Kottmann. Dr. Dietmar Kottmann has been working with Oliver Wyman for nearly 14 years. Dr. Dietmar, and I hope you don't mind me shortening slightly the name right now, is a partner at Oliver Wyman in Munich and a member of the insurance and the digital practice, where the team that Dr. Dietmar works with produce some of the most interesting research, and we'll go into it in a few moments. Dr. Dietmar has more than 20 years of management and strategy consulting experience. His core competence for me, based on what I read, is IT, strategy, operational strategy, digitization, and organizational change. Dr. Dietmar leads insurance in the DACH region and is the Oliver Wyman lead author of the InsurTech Radar series, which I want to talk about today. So first, Dr. Dietmar, can I call you Dietmar?
You know what, Sabine? Actually, it sounds so funny to be called doctor. I'm basically not hearing that for I don't know what, the last 10, 15 years and so on. You know that Germany very often is known for its conservative culture, but you can absolutely kill the doctor. So my name is Dietmar, yours is Sabine. Let's stay on a first name basis for today. I'm very excited to be with you today, Sabine. Thank you.
Thank you so much. So, you know, I took the CV, so I provided the CV, what I know about you, what you shared with me. But, you know, for our listener, tell us a little bit more about you as a professional, but as an everyday person.
More than happy. So I basically started my career on the nerd side of the universe. So I was back at school already playing with computers, programming, selling programs, going back to the times of, whoever remembers it, a Sinclair ZX81. So really the early 80s. And then obviously started my career in studying and also doing a PhD in computer science. When I realized that the world is not acting like a computer, but there are more exciting pieces someplace else. And then I was looking really for a career that allowed me to combine my passion for technology and for computer science with really affecting something in the real world. And so I entered strategy consulting. First, not focused only on insurance. I was more or less working across many industries, the deepest in financial services and in travel and tourism, because travel and tourism, actually, the e-commerce boom was already happening during the .com times, so the turn of the century, while in financial services it took a little bit longer, and especially in insurance it took a little bit longer. And so I was able to actually do more of my passionate things in travel and tourism. And then it shifted into the direction of financial services. And since I joined Oliver Wyman and also the 2 or 3 years before, I'm really nearly 100% focusing on the insurance industry with 1 or 2 exceptions, but I'm now really deep in that. And I kept my passion. So from a content, I'm really spending most of my time at the intersection of digital and insurance, that not only on DACH. So my second job that I have at Oliver Wyman that you mentioned, let's ignore that for today. But my job around digital and insurance is something where I actually help teams not only in the DACH region, but in various countries. So I have actually worked for local clients this year, for example, in the Middle East and in Africa. I've worked in Asia, I've worked in Australia. So it's really something where I am seeing local businesses in very, very different countries. And that's what makes time really interesting, because the insurance markets are so different. And you see it when you actually bring an InsurTech model from one market into the next, that it's not really an easy game. But really experiencing firsthand how the differences are and what's working, what's not working, is something that really helps you to also judge what the right directions are. That was my professional life. And if I go back to talking about the person Dietmar, then Actually, there is one big theme in my life, and that big theme is curiosity. So really curiosity like a child. That is the kind of the big driver that is giving me energy and that is driving me forward. Instead of just repeating what I've done in the last couple of years, really being curious and open about new things, about new developments, looking out, that is the big driver of me as a person. And other than that, I'm married, I have 2 boys. I'm living at 2 of the most wonderful places in Germany, so have the luck that I'm commuting between the Lake Constance. Whoever doesn't know it, I recommend that you just go in Google and type in Lake Constance and look at the pictures. And Munich, also one of the nicest cities in Germany. So that is me.
Thank you so much for this wonderful introduction. And your ability to balance personal life with work, which takes me to what keeps you awake at night, therefore, Dietmar, when you think about your customer and the challenges that affect your customers every day.
Let me start with an example without naming names. But one of the most negative experiences that I had in my consulting career was back in the .com days. Back then, projects were not called digital strategy projects, they were called e-commerce strategy projects. That was the name of the day. And we actually did a large e-commerce project for one of the large travel players. And the core strategy that we recommended for them, we know today in hindsight it was the right strategy, because it was a strategy that was later then really executed by a startup, and that startup has today not only unicorn, it has decacorn valuations. So it really is one of the large success stories in travel and tourism. But the client was unable to actually execute it. He had a second chance to execute something like that. And again, he didn't take it on. And so it was ultimately not really a success story, the contrary, even though intellectually what we selected for the client as a strategy was spot on. It didn't help. And that is something that actually keeps me awake at night, because consulting is not research and development. Consulting is not what you do at university. Consulting is actually generating real impact for your clients. And that is where we failed back then. We had the right idea, we had the right strategy, but we were unable to set up the client for success.
What do you think that is? What do you think are the cause of that? Because your interpretation of what consulting is very accurate and is very important. Every day when we work as consultants, I remember that from my past career, you have to deliver more value that, what the project is about, right? When you actually look at value creation, which is very much embedded in consultancy and consulting mindset, it's about impact, but it's about understanding timeline, and it's about delivery outcomes and how can you delight your customer every day and all the time better than what they came within, right, when we started day one. So my question to you, Dietmar, is, what do you think happened and what could have happened differently? Why did that happen?
The key to that question is what do you define as impact, and how do you think about impact in your consulting project? If you think about what is the right answer for a problem, you're missing the boat, because then it might be that you're ignoring the ability of an organization, that you're not setting it up in the right way, that there are actually possibly constellations on the board of your client that makes a kind of a real big push, which might be necessary and possible. So then you might better actually settle for something a little bit less. It can't be achieved on any project, obviously, the kind of the big impact. But thinking about impact, thinking about what impact can be achieved on a project, and doing that as a regular part of your consulting process, and possibly even discussing directly with your client, what is the impact that we want to achieve here? because often the question on the table is not really the impact that someone has in mind. So when is actually a consulting project a success? What needs to have changed? Getting clarity and discussing in the client team about that impact and how you can achieve it is, I think, something that 20 years ago people didn't really normally do in each consulting project. Then it was about the project, then it was about executing, about delivering the deliverables, and making that a practice to think about impact from day one and to embed impact into how you run your consulting project. I think that makes a difference.
Massive difference. So I just wanted to also highlight as part of our conversations that, so you work with Oliver Wyman, and Oliver Wyman is a massive group within groups, I would say, and there is connections with a lot of companies. And as our listener viewers will go into listening to our conversation, they would probably love to hear how you interact with the other group members. So you have Marsh McLennan, you have Mercer, Guy Carpenter, Celent. So how do you work with your peers, and how do you deliver value to the insurance sector, including your peers?
That could be a conversation for a complete evening, Sabine. So let me shorten that. First, you have the Oliver Wyman Group, and the Oliver Wyman Group is the management consulting arm of Marsh McLennan. So companies like Celent, or also if you look into other industries or into other functions, companies like NERA, companies like Oliver Wyman Actuarial, or the Harbour Group, if you think about automotive, are also part of the Oliver Wyman Group. And obviously, these are different consulting business models, having a different operating model, but working very openly together when there is a client opportunity, when it makes sense to actually align and make a joint offer. There are clear Chinese walls with Marsh, Mercer, and Guy Carpenter, because obviously there is really something where the other business, or there are opportunities where when the other businesses can help us. The most obvious on HR consulting with Mercer, but there are also possible conflicts of interest. And so having real Chinese walls there and making the engagement options very transparent to the customers, and then agreeing what kind of engagement should happen, is paramount for this cooperation. There is a lot that we can do together with our partners. So Marsh, Guy Carpenter, and Mercer. But it is something that needs to be managed explicitly. So there is nothing implicitly if we don't talk about it. There is a big Chinese wall, and nothing goes out of the Oliver Wyman Group.
And this is wonderful. One thing you need to know is that I sit on the Women to Watch Foundation board, and I was very fortunate to convince Daniel Guzman from Mercer to help me with the future of work discussion. And we had a wonderful webinar who actually inspired women all around the globe. And I think this type of collaboration makes a big difference in our industry, which is insurance, and for new people wanting to come into our industry, Dietmar.
Absolutely. Absolutely.
So I would like to go back to you and the work you are doing. So who is the Oliver Wyman customer? I would love you to address that question in the broader sense, because I know you will tell me insurance company, but you are the person who is behind the InsurTech radar. So we need to understand how that works better.
More than happy. I mean, obviously, Oliver Wyman not only has insurance companies as consultants, we are also active in automotive, in energy, so basically management general, consulting generalist. Where you're obviously right is that within our insurance practice, insurance companies, but also insurance distributors, or also financial sponsors, so private equity houses, venture capitalists, are our client. And to do it much more narrowly in terms of the InsurTech radar and digital in insurance, the kind of the clients that we have are more or less three kinds of clients. One, I've just mentioned the financial sponsors, so PE firms, venture capitalists who actually want to invest in digital insurance businesses, or in insurance businesses more in general, where digital plays a role. Two, obviously, customers who do want to build something new in the InsurTech space, which was, by the way, one of the largest projects that I did this year. So really helping a company build up an InsurTech offer. As it's still in stealth mode, I can't go into any details, so please don't ask for that. And then you have the bread and butter. And the bread and butter business is, and that's obviously the largest piece, even though the other two are possibly the more exciting, more fast-paced, and more front-running, is how can I actually help our incumbent clients to transform to become successful in the digital world, which is a very broad question. So this ranges from strategy, this ranges to maturity assessment, down to very, very clear line of business strategies, thinking about changes in the marketplace, and also helping them to set themselves up for implementation, or together with our digital practice, even doing some implementations. So for example, we also implemented AI models to optimize claims processes for clients as Oliver Wyman, together with partners.
So you mentioned, Dietmar, that with some of your customers, you aim to build future tech capabilities and digital apps every day. I will not ask you about the confidential project, but when you look in general about what that means, what are you seeing? You know, if we can combine that with the trends affecting our industry, what are you seeing which are so important for incumbents, I assume, to want to implement as capabilities to build the business of the future?
Again, let me actually break your question down into 3 areas and pick one, or I would like to pick one of them to go a little bit deeper, because that might be the most interesting one. If you think about innovation, there are always 3 kinds of innovation. Number 1 is efficiency innovation. So reducing waste, employing technology and things like that, which is actually very straightforward with tools like process mining, robotics, and machine learning, stuff like that. 2 is sustaining innovation. Just think about the automotive market, where you have a version of the car every year, which is really not a different car, but which is something that actually has a couple of features, which has a changed exterior. So basically making the car a little bit better every year, making the product better every year. That could also be in terms of adding some features and some coverages to products. It could be adding some engagement models. It's really sustaining what you do today. And 3 is what I call market creating innovation. So when it's not about this kind of evolutionary process where you become more efficient or make what you already have better, but where you think really about how does the market change and how do I need to position myself for future success. And I think it's not a big surprise that I would love to talk the most about the market creating innovation, as the other 2 more evolutionary, even though they are big business for us. I think for that podcast, the 3rd one is really the thing that I think is more bullseye.
Absolutely. Please tell us more.
Yeah, if you think about that market creating information, the fundamental principle that we have is that you actually need to think differently about what you need to do if you want to approach that. And you need to think differently in terms of that you need to start with a problem, not with a product. And when you think about a problem, the problem always needs to start with someone whose life and whose existing you might want to improve. And that could be really a company or an individual. And what you need to look at, so let's call this company or this individual your customer. And what you need to look at is what is the progress that this customer is seeking. So what does he really want to do? What does he really want to do and actually make progress? This could be a functional progress, so something that actually talks to the engineer in me. But that could also be an emotional progress, so make somebody more safe, more secure. It could be a social progress, If you just think about how much money people are spending on car brands just because it's the brand and it gives them social status, it might not even be faster or having better cornering than another car, but they're still willing to actually spend more money on that because having that car is elevating their social status. So the progress that the person is making with this purchase is not a functional progress, it's actually a social progress. And you need to think about all three of these dimensions. So the social dimension, the emotional dimension, and the functional dimension, when you think about what progress can I help my customer to make. And what it all fundamentally is about, and we're calling that jobs. So really what a customer wants to get done. And this could be in the social, emotional, or functional dimension. So what does he actually want to get done? How can I actually can help him or her in a new way to make this progress? So let me give you an example. If you think about managing one's finances, something like a functional view could just be that you have an overview, that you know what spends you will have, and that you know that you are covered. So that's the functional side. There might just be a social side to it, that you actually might want to relieve the burden that in a worst case scenario you place on your children. And on the emotional side, you might be looking for being in control and being confident that you can manage your finances. And if you just look on the functional side, I think sometimes you're missing the boat. So it's really that kind of what jobs does somebody have to make him feel more in control? That's not a functional progress. That is an emotional progress. What do you want? What job do you need to do to make someone more confident about their finances? Again, something which is much more on the emotional side than it is on a functional side. And to be successful in these market creating innovations, you need to think about all of these elements. Yes, it's often about convenience, it's about hassle reduction, but fundamentally it is about helping your customer to make the progress your customer is actually seeking. And we have a methodology that is starting from exactly having that discussion on that level. So if you think about market creating innovation, what actually is it, are the jobs that are relevant for us? What actually does it mean on the functional, social and emotional dimension? Where might be the difference, the biggest, to what it is done today? And how can we then translate that into a proposition and test the proposition, minimum viable product ideas, so you know all of the elements which come to it. But that lens, start with the jobs to be done, start with a problem, identify the relevant jobs of your customer, and then think about it, how you can improve these jobs and basically fire whoever is today doing the job, because nearly every job is done for someone. But if you feel not confident about your finance or whatever, the job is not done well. And so firing whoever is actually at the moment working there might be a simple task, if I can work on the confidence side. That is how we're approaching these market creating innovations. And as you see from how I'm talking about it, that actually is the most fun part of the business, to really starting to really think about what we're doing in a so fundamental way, going much deeper and being much more interesting and playing to my curiosity that I mentioned earlier, then about how can I advance my next generation of product, which is absolutely fine, and where we can help clients and where we are helping clients very successfully. But the things which are the really, really big ones are this.
So it's interesting because we use very similar terminology. I always talk about efficiency sustaining, and I call it game changing innovation, to actually help people understand, between the short term and long term. And I think what I love about what you talked about right now is you can fire people not doing the right job. So when you look at the job to be done, you need to be very clear around the delta, around what is a good job and what is a less done good job. So you need to have a view of what good and bad is. And then you actually have to make a conscious choice to improve each of those jobs against the customer engagement journey to actually use digitization in some ways to create those friction-free experiences, which enable those jobs to be done better, faster, cheaper, I assume, for the customer.
You're spot on. You are spot on. And if you think about that somebody is doing the job for the customer today, and if you think about what I really need to achieve is that this customer fires whoever or whatever is doing the job today and hires me, you also immediately get the link to 10x or all of these things, because you need to be very, very convincingly better. And it is possible, and it is possible in many, many areas to be really convincingly better than today. And especially, you mentioned the InsurTech radar earlier. If you think about the InsurTech radar, when we were looking into what actually makes InsurTech businesses successful, it's one of two kinds which are globally successful. One, InsurTechs who are actually really working on an inefficiency in a market where the historically grown fabric of the industry just isn't ideal. And you can then launch something which actually improves that by a big factor. So just think about the wealth of life insurance startups which happened or InsurTechs which happened in the US in the last couple of years. None of them is existing in Germany, for example. Why? Because Germany has businesses like a Ladder or Ethos already for 20 or 30 years. They were only called differently. So there was around 2010-ish, a study by the University of St. Gallen, which was looking at the largest direct life carriers globally. And 5 of the 10 largest direct life carriers were actually domiciled in Germany, even though Germany is very, very far away from one of the largest life insurance markets globally. But that actually shows you an example. There was actually an opportunity where the existing system had inefficiencies, problems, and you could launch something. So that's category 1. And the second category that we found out that really is successful is what we call platform business models. And a platform business model is for us not an ecosystem. So we don't love to mix these two words up. A platform business model is for us a technology-driven business model which is renting market access. So for example, Amazon today is 60% platform because 60% of its gross merchandise value is on the marketplace. And on the marketplace, it's actually renting out the market access that people go to Amazon. And only less than 60% today is the retailing business model from Amazon. So that is a platform-based business model. Amazon has the access to the customers which come to Amazon, and they're renting it out via their marketplace. There are many models which are renting out market access, be it to end customers, be it to distributors, but also be it to suppliers. And that's the second category of InsurTech business models, which we found to be really the most successful. So either category 1, the ones which are addressing some of these really local inefficiencies that exist in every market, but that are different, which is also why it's difficult to actually migrate a proposition-based InsurTech from one market to the next, or these network-based business models, which are typically not proposition, but either distribution or operations business models.
So, I talk about digital ecosystems, and you know what? I would still include, a Prudential Pulse or a Munich digital partner Wacom as part of my digital ecosystem. But you have created a nuance, which comes from, I think, the fintech world, which is platformification, where you're actually differentiating what is a proper ecosystem vis-a-vis what is a platform-led ecosystem. One thing I want to highlight that I met Dietmar in Cologne when we were both at the Meschmeyer Group Ventures InsurTech Symposium that very well-known friend of ours, Simon and Mark, put together. And that is the way I discovered the InsurTech radar. So Dietmar, looking at what you just said about ecosystem and platforms, and looking at the world of InsurTech, you actually split it this world into three components, if I remember well, around proposition, operation, and distribution. How does that work within the radar and the radar lens?
So first of all, everybody who's interested in that just goes to Google and types in Oliver Wyman InsurTech radar, and you then get access to the 6 of them, or connect me on LinkedIn and you find them on my publication space. So it's very simple and for free to get access to these, no strings attached. And when you talk about the 3 things, we basically call that our segments. And these segments have stayed constant since we invented the InsurTech radar in 2016. But the real thing that we're doing is one level below, that we're breaking each segment into what we call business model category. And that's how we look at the world, so through business model categories. And while the 3 segments have stayed constant since 2016, on the next level, the business model categories, actually there had been quite some development that we learned, that we saw what was working in the market, that also predictions that we took were coming true or were not coming true. So that has evolved. And we are seeing the world through this business model category lens. At the moment, there are 18 of them. Don't worry, I don't go through these 18 because otherwise the time will be up. But I'm explaining it a little bit. So these are actually business models who have a fundamentally different look and feel, and who we then really can translate into forward-looking predictions on the level of the business model category and contrast it to what's happening in the marketplace. So, for example, the radar segment proposition has 2 categories that I would want to talk a little bit about to shed light to it. The 2 categories that I want to talk about is A, the so-called neo-carrier based on processes, and then the neo-carrier based on product innovation. With a neo-carrier, we not necessarily mean a full stack InsurTech, so because that is from a go-to-market category important, but not really differentiating of how we look at it. It could also be an MGA. The difference is the neo-carrier with process innovation. They are removing hassles from underwriting. They are having digital engagements. They might have lower costs. They might have really an optimized quote-to-bind journey with less underwriting questions. So it's all about removing hassles and making processes much simpler. The neo-carrier with product innovation uses digitalization to actually change the product. The most obvious one is obviously a telematics product, but also all of the connected life products, or what is now emerging, that there are SME products which are actually using data feeds from their SMEs and from their ERP systems to make a cover dynamic. So these are all neo-carriers which work on product innovation. These were now 2 of the categories that we had under the headline of proposition. There are 5 more. And if you want to find out what the other 5 are, go on the website.
Absolutely. Very nice. Very nice. But so you mentioned that the radar was created in 2016. So what started your decision to start the radar then and build it to some of the best thought leadership in our industry?
I think I've started this conversation about talking about my curiosity. And that was for me personally really the driver behind it, because there was a new universe starting to actually get scale, the InsurTech universe. I mean, it started before 2016, but in 2016, it was actually very obvious. You might know that we had been the presenting sponsor of the InsurTech Connect for quite a couple of years. And it's the same thing, that the real journey also of the InsurTech Connect started in 2016 together with us, okay, a little bit earlier. But in terms of really getting scale, it was there this year. And so I found that there was critical mass. It was very clear that that wasn't a one-year trend, but that it was something which actually will take quite a little bit longer. And that together drove the decision.
We talked often about rethinking insurance. I mean, the process to win within the insurance space we live in, Dietmar, is to come up with new initiatives that drive people and that allow people to connect to things, which allow them to do better things to transform our world. So we talked about the radar. We talked about the way you differentiate ventures in some ways. I would love to go to the next phase of our conversation around what do you think are the top priorities, and I'm going to get you into 2022 now, that we need to look at next year as we go into next year. And how do you differentiate that thinking around independent ventures and the one which may be built like the project, the special project you're working on for corporates as well?
That is a very, very broad question. And I'm at the moment ignoring any comments on valuations and things like that, because I think that is for another podcast and possibly also for another discussion partner. And I'm going a little bit into content.
Oh, I'm going to get you on the valuation one later, definitely.
Let's go on the content side a little bit. So what I actually do believe what is happening on the InsurTech scene is two big themes. One, that this platform definition that I was using is getting more and more traction, and not only on the supplier side, but also on the customer side, also on the supplier side. And by the way, I agree with you that there is a link to ecosystems, because there are ecosystems which include a platform, but there are also platforms which are not an ecosystem. Like, for example, if you think about a software house like Actuaries in the UK, I wouldn't call that an ecosystem, but it actually is a platform business model, because it's renting access to brokers to carriers. And there are ecosystems which are not a relevant platform for the insurance industry. So there is an overlap. And I'm absolutely not discounting your excitement about ecosystems. I'm sharing that. I'm only saying in terms of, if you look at the success criteria, the question, can you actually embed a platform into an ecosystem, is in my point paramount. So that trend definitely will continue. And aside from the ecosystem world, we actually have over the years seen a shift in the business models in the InsurTech scene. So if you look at it on a segment basis, there had been many, many more distribution-orientated InsurTechs 5 years back than there are today in terms of the overall share of the market, while operations and actually finding new way of underwriting, of managing a claim, of actually doing an advice journey for your clients, but not doing it yourself, but selling it as technology to carriers or to brokers, and propositions, really thinking about how can we change the insurance product or proposition itself. These two have basically gotten more share against the purely distribution-focused business models. And I'm expecting that this trend will actually go on, and that we will see more innovation on the proposition and on the operation side in 2022. Third one, I'm a big believer that we will see the emergence of a couple of ESG-focused InsurTechs. What do I mean with that? Think about, Sabine, if you were an organic farmer, and you're not only doing it for money, but because you believe in it. You believe that actually sustainable food is a passion of you and your heart is behind it. And now you are approached by an insurer who actually says, I am actually part of your community. I'm not insuring a single farmer who is actually using pesticides. I'm not insuring a single farmer who's keeping all his animals in a barn. I actually have my IT somewhere in Norway next to a dam, and I'm using the green energy and I'm cooling with an open window. I think you know what I'm talking about. Yeah. So really that kind of impact positioning, that is something that is very, very, very hard to achieve for an incumbent, because then you need to throw out all of the farmers which are actually using pesticides, and otherwise you could never have such a sharp impact positioning. And farming was only an example. There are many, many such parts of the industry where actually people are mission-driven, and you have a significant mission-driven customer base. And I believe that this mission-driven customer base will only increase the next couple of years. And the same with end consumers. And incumbents cannot take such a clear position being part of such a community, like someone who is built up from day one as a fully front-to-back, impact-driven, sustainable insurer could. And I believe that that is something where we will see a couple of moves in 2022 and beyond.
Cool. I love it. You know, we've done quite a lot of work on sustainability, and you're right. Most of the sustainability ventures are not sitting in insurance, but there are quite a few out there. And I love your lens around the InsurTech really being a custodian of evaluating true sustainability parameters, such as environmental, social, and governance metrics. You won't believe, last night I was doing some shopping in one very renowned UK store, and I was trying to buy some of my Christmas shopping. And I have a guess, some of the things I used to buy last year are gone because they are applying now sustainability metrics around the way they are sourcing some of the products. And I thought this is fascinating to me because, being French, some of the things I was looking for were from France. And I guess I realized that some of the things are not considered sustainable anymore. Guess what?
Here we go. Here we go. Yes.
So looking at some of the priorities you have shared with us, tell us, where do you see the world of corporate venturing going? I know you have developed amazing frameworks, approach, and techniques to help your corporate clients become better at digitization. Where do you see this going in the future, Dietmar?
I do think the big challenge and the one thing that needs to actually improve going forward to make it a success is to get from the outer orbit and land on the planet. I think we have all seen that lots of corporate ventures actually had been launched, had gotten some MVP or pilot status. And if you look back in terms of how many have been launched and how many actually were scaling up, I think the look at that won't be too positive if we're really honest and see what has been launched. Improving that and getting the discipline and also getting the practices to actually venture things which are not only at the outer orbit periphery, but which manage to actually have an impact at the core. That is what I believe is the challenge of the next couple of years.
So I would love for you to give us your last word of wisdom. I want to thank you for your time and so much. But by the way, I'm going to get Dietmar to come back to talk about valuation, everyone. Let's just be clear, this is going to happen. So what are your last word of wisdom for today?
A very simple one, and I'm there only referring to Jeffrey Moore. I think his Zones to Win is a must read for that one. And other than that, I believe the next 10 years in insurance will be much more interesting than the last 10 years or the 10 years before. So we will be facing very, very interesting times. Thanks, Sabine.
Dietmar, thank you so much for your time. We are all super grateful. We can reach out Dietmar on LinkedIn, right?
Yes.
As you shared, we can go and check the InsurTech radars. We can find them from your profile on LinkedIn and also reach out to you.
And if you contact me on LinkedIn, write 2 or 3 words, because I'm very conservative in accepting people who I don't know if they don't tell me about them.
Perfect. So you have it. Thank you. And
thank you, Sabine.
Looking forward to seeing you soon. Bye.
I'm here. Take care. Bye-bye.